Mark, got some pretty big revisions, got some pretty dovish minutes, and yet the Treasury market only moved by 4 basis points. What do we do?
Yeah, absolutely. That's because I think the general message was dovishness. Obviously, the revisions were large, as you say, and those minutes were definitely dovish. They were showing that the reaction function is a Fed that wants to cut 50 basis points if it gets the chance. That said, the economic data is just fine. So even though the reaction function is dovish, the fact is the economy is doing absolutely okay for now. Sure, there are revisions lower in the jobs data, but the trend is still an economy that is consistently adding a lot of jobs. And therefore, we are already pricing an exorbitant amount of cuts over the last month or so. So ever since the panic in mid-July, sure, we've pared back some of those rate cut butts, but we've still got too many cuts priced into the curve. We've got more than 6 priced in by next March. The only way that's possible, and it is possible, but the only way that's possible is if we suddenly get a crisis, if we suddenly get severe recession, because inflation is not going to get to a world that mandates that. So therefore, the natural trajectory of rates, of yields, is to go higher over the coming months, but it's going to be difficult to play because of that dovish reaction function. It means the market is overreacting to dovish news, even though the general trend will be yields to go higher.
Mark, the PMI data out of Europe are going to tell us that the European economy is okay today.
It's going to probably tell us it's okay. It's not great. Look, the European economy has been the kind of disappointing story for most of the past 10 years, probably, or longer. I'm not going to be, I don't think we're going to suddenly get excited by the European story, but I think there's too much negativity priced into global growth for a global growth story that's doing fine. It's not doing brilliantly. We've got a world which is a little bit more nuanced. It's mixed. It's in the same way that we've got an EM world that is not just one bracket of EM. We've got strong performers, weak performers. In the rest of the world, we've got, India is booming. We've got Japan that is stagnant, but overall Asia's doing fine. It's the same in the global story. So France has some economies that are doing very well, some that are a bit disappointing, like Germany, which is important, but the overall story is one that is muddling through just absolutely okay.
Mark, a quick talk on EM here. It feels like it's getting a little bit of a revamp, but then you see some really great stories actually about the Mexican peso taking a little bit of a beating. Walk us through the EM story.
Yeah, that's actually probably a great one of where the divergence has gone further. We're seeing Brazilian stocks surge to a record. That's been a real kind of boom story this year. And meanwhile, on the flip side, in another part of LATAM, we're seeing Mexican peso traders just getting burned by trying to buy the dip. It's getting cleaned out again and again. Supposedly, we've moved beyond the carry trade clean out, and yet Mexican peso is getting hurt really, really badly. And I think this is a story that, it's not just trading EM as one asset class, but there are enough good stories out there. I think there are many in Asia. I think the Kospi can still benefit from the overall kind of tech story. It is cheap. I think Brazil still has upside even though it's at records. I think Hong Kong is still discounted. There are many good stories in EM, but it's not just one narrative.